What a week. That was the craziest week we've ever seen crypto. It looks like the week is closing on a little bit of a high. We're getting Bitcoin rallying. Well, you want to call it a rally. That's 6% up today. And we're getting altcoins rallying. And the big question that everybody's asking today, everywhere I go, is, was that the bottom? And is this over? So today's Friday. It's our big banter day. And of the guests, some of the guests think that it's finished, and some of the guests think there's a lot of blood still to come. So it's going to be one of those shows where you're going to have to make up your own mind. So let's do this. It's Friday. It's been the worst week we've ever had in crypto, but we're here and we're fighting strong. So let's Yo, Banter fam, welcome back. I wonder, tell me, what do you think? Do you think that was the end of the Bitcoin carnage? Do you think it's a temporary relief bounce, or do you think there's a long way down to go? Carl, I want to know from you, because I know that you sleep with the bears. I mean, you sleep with the bears.
I was sleeping with the bears, but I longed basically from 28 down to 26.
You longed?
I longed. And then now I took profits because I took altcoins, so I made like 40%.
So you took profits?
Yeah, I closed the positions, and then if Bitcoin gets above 31, I'll get back in there. Otherwise, it's going down again.
All right, so 31 is your key level. Carl, maybe you should be doing the main show, and I'll be doing the charting shows or something. All righty, I'm dying to hear. Let me know in the comments. Let me know what you guys think. Let me know if you think that the worst is over, or whether this is just a little relief bounce to get to take our breath back, to get our breath, and then we can go down. We're going to be going down some more. Certainly has been the worst week that I've ever seen on any markets, let alone in crypto. I've never seen a week where a token does that. I mean, it's still trading. 0.0003. Luna is still trading. I don't understand. I don't understand what's going on there. And then you got the stablecoin, which should be pegged at $1, trading in 0.1160. What? 0.1160. 11.6. All right. So Friday today, banter today. Big show, big guests. We need to go out. We handpicked these guests for different reasons. Each one of them has got their own perspective, and we're going to talk to them about everything that we want to know on the market. We want to know whether what they think of the lunar correction, of the lunar collapse, what they think of the correction, whether the correction's finished. Today we've got three guests. We've got James. James, welcome, my friend.
Good to be here.
Yeah, and we've got Jordi, and I know we've got Alex Mashinsky, who's busy on another stream, but he'll join us in a couple of seconds. Jordi, good to see you again.
Good to see you, even under the circumstances.
Yeah, terrible circumstances. Jordi, before we go any further, this has been haunting me for not haunting me, but it's been playing on my mind for a while. But I remember that you said that when the yields invert, when the US bonds become, when the yield starts coming down, that would mean that the Fed has seen enough. Now, I've been kind of watching this chart, which is the 10-year Treasury yield, and it looks like it's done a little bit of an about turn. And I'm looking at bond prices. Bond prices have turned. What do you think? Is this like a positive sign? Has the Fed now finally said, okay, we've done enough damage?
There's the first harbingers of that. I think it's still early. We need to see like a more sustained move down in yields, but at least we're below 3%. So the market's kind of saying, look, inflation is already going to start coming in. It's all about inflation, right? So as soon as the Fed sees like a few prints, 7%, 6%, 5%, we start kind of going down, they'll kind of relax. So I think what the market is telling us is there is so much demand destruction right now that we've seen the top in inflation.
We've definitely seen a top in inflation. I mean, we were expecting, last read was 8.5. We were expecting 8.1 this time. We got 8.3. It's the first downward read in 7. So it's the first downward read in 8. The last 7 have been up, and this was the first one that was down. But the question is whether the Fed's seen enough pain in the markets. I quickly want to take us to the NASDAQ. Let's quickly go to the Tech 100, because I guess that's probably a good, it's probably a reasonable indicator. It's been less hit than the S&P 500, which is obviously much broader. But it's also not as bad as some of the growth stocks. Now, if you take, that's now 27% down. Alex, do you think 27% is enough for the Fed to say, okay, we can be slightly more dovish?
Hey guys, thanks for having me. Unfortunately not, it's not enough. The issue is that the Fed doesn't care how much damage is, unlike March of 2020, where the Fed jumped in, caught the falling knife, reflated the markets, provided all the liquidity in the world, trillions of dollars in liquidity. Here, they are focused on inflation. Again, remember, it's a crypto market that is watching the stock market. The stock market is watching the Fed, and the only thing the Fed is watching is inflation, as was just stated here. So they could care less if the market goes down 50%, because if inflation hits 100 or 200%, our entire economy is going to have much more damage than the stock market going down 50% instead of 25%. So I lived through 400% inflation. I grew up in Israel, and Ran probably knows the feeling, because he comes from South Africa. They had the inflation there as well. And there's nothing worse than inflation. You get paid, and if you just wait a few days on your paycheck, you go to the store and you can buy half of what you could have bought just a few days earlier. And that just destroys any economy. Now, we are the world's reserve currency. We are the world's largest economy. This is all about all of us basically pulling together and taking the pain. We didn't take the pain in 2008. We didn't take the pain in 2020. We're going to have to take the pain now. And, I lost several $100 million in the last few days. So it's not like I'm not taking the pain already, but we all just have to be ready with what's happening here.
Yeah, but I mean, at some point, the markets go down so much. So let me start off by saying,
I'm not talking about Celsius personally, right?
So let me start off by saying that I know, like you say, I know what inflation is like. I live in South Africa. In Africa, currencies can devalue by 100% or by 50% overnight or whatever. They can, there are periods here where the currency pegged. In fact, I built a business. It took me 17 years to build a business. And I sold that business for a big sum. It's quite public. I mean, I sold the business for over $100 million. It's a very public thing. It's on Google. It's everywhere. And from the time that I sold it until the time I got paid, the payout halved because the currency halved. And so I basically got by the time I got paid, it was half of what it was actually worth. So I know how bad inflation is, because currency devaluation and inflation equals the same thing. But I mean, at some point, surely the Fed's going to look at the numbers and say, hold on a second. There is demand destruction. There is wealth destruction, real wealth destruction in people's pension funds, in people's retirement annuities. And we can't have this is, I think, one of the first market crashes of 20% plus where the Fed hasn't stepped in and chucked money and thrown money at the problem. Am I right in saying that?
They have an agenda, and they got to put a lid on inflation as quickly as possible, and all else goes out the window until that happens. And because of everything that is happening so fast right now, like you've got CPI, it's ticking down, but not fast enough. Capital is dried up. The recession is definitely here. Unemployment's on the rise. Housing market is toast in the US, and construction, I think 13% of US GDP, for example, is tied to the housing market. Inventory is going up. Rates are going up fast. I mean, 30-year mortgage rate more than doubled in 10 weeks. And consumer confidence is in the toilet. So it's all negative. I think what the Fed is actually doing is actually worked. It's been very effective. The demand destruction, as you mentioned, is gone. So that means they are going to fix the inflation problem by putting the handbrake on. But then once they see the second quarter of recession, which we are definitely in a recession, they'll start quantitative easing again. And then they'll reduce the rates by 50 basis points. It's the same old game.
But you think, I mean,
Yeah, I totally agree with James, and I was on James' show yesterday, and I used this analogy of a basically a multi-head monster that managed to get out of the Pandora's box. And every month that we see lower inflation, it's us chopping one more head from this monster, and we cannot get it back in the box. We cannot put the monster back in the Pandora box until we chop all the heads, at least three heads. At least 3 heads, meaning 3 months worth of inflation going down to 8%, 7.8, 7.6. The minute the Fed sees that, the minute they see enough traction on the monthly numbers, then exactly what James said is going to happen. They're going to come and say, okay, you know what? We told you there's going to be 7 or 8 rate hikes. Okay, we're down to 5. We told you we're going to be buying back quantitative tightening. We're going to be buying back 50, 60, 80 billion dollars every month. We're going to chop that by half or get it to zero, right? So, but the good news, again, there's some good news here, right? The good news is that everything, all the worst is already priced into the market.
That's what's going to be my question. That was going to be my question. Surely the market is now pricing in 7 rate hikes, 3.5% interest rate, a very aggressive Fed. Yes. Surely, if that's the point, then from this point, I'm going to say it can only be up.
It is priced, but the leveraging is not priced. Meaning, if you look back, if you go back, Archegos really started this whole thing, right? Why did Archegos start? Archegos was the canary in the coal mine because major banks lost $20 billion, right, overnight. Right, because they basically extended credit 5, 6, 7 times leverage to a guy who used the same assets on 4 different banks without them understanding that they all were using the same collateral, right? So overnight, all these banks went back to all the hedge funds and everybody else and said, okay, cut back. Just, it doesn't matter who you gave credit to, start pulling back on credit. And that started the deleverage process. So the Fed controls the rates, the Fed controls tightening, the Fed has atomic bombs that it can throw and cause a lot of damage, but they don't actually control demand and they don't control deleveraging, right? So the deleveraging process took us 15 years to create all this leverage. It's going to take some time to deleverage. It's not something that happens overnight. So it's accelerating, it's happening quickly, but we haven't seen the bottom of it. All of the selling that you're seeing is deleveraging. Hedge funds and others who got margin calls from the prime broker, from the Goldman Sachs, from the Morgan Stanley, and they have to sell. They don't have a choice. They have to sell ARK. They have to sell Tesla. They have to sell all these different high-flying stocks that they have in their portfolios.
And one of the good things and the bad things that happens nowadays is the speed at which wealth is destroyed is staggering. 15% of global wealth was destroyed in the last 20 weeks. So the good news for everybody out there, it happens fast. And we're kind of close to the bottom, I reckon.
Yep.
Alrighty.
So now we're in the rebuilding process, right? So now I'm going to focus on rebuilding those few $100 million.
So the question is, so rebuilding implies that you think that the rain is finished and that you can come out of your house, you look left, you look right, no more rain, and then you go outside and you start rebuilding. But you don't start rebuilding if you think there's another storm coming up ahead. So if you say we're in for the rebuilding, then what you're saying is that you think that the majority of the storm is now finished, right?
So in crypto specifically, we always have an exaggerated reaction. Crypto always goes down more than the stock market, and it always takes the pain faster. And this time, on top of the normal, basically crackdown that we had because of what was happening with the Fed, with the stock market, with the dollar getting stronger and everything else. On top of it, we also had this Luna situation where $50 billion just evaporated and everybody got even more scared. Right.
More that let's quickly I just want to get a feel here.
My point is that caused even faster evaporation in the crypto market, meaning we have tested even lower lows that normally we wouldn't be testing here. So when Bitcoin went to 25.5, that's because an extra 3.5 billion of dumping from Luna of all of their Bitcoin at once. Basically, they went to Gemini and put a market order for $3.5 billion, basically.
We don't know that. We don't know that because there were rumors that said that they hadn't. Anyway, I just want
They
to get a feel.
liquidated all their Bitcoin. What do you mean?
I just want to get a feel here for something here. So I'm looking at the stream now. Right now, there's 636 likes. If you were a Luna holder and stop, don't just smash the like button. And Luna was your biggest bag. Smash the like button. I want to see how many people Luna was their biggest bag, because I think that for altcoin people, Luna must have been their biggest altcoin bag. So I think we had our master deleveraging industry event. I don't think we've ever in crypto seen a layer one protocol collapse, and I certainly didn't imagine that when a layer one protocol collapses, it's going to be collapsing in 3 days. I always imagined that a protocol would die slowly. I didn't imagine that a protocol would die in 3 days. It wasn't part of my thought process.
I mean, most layer ones don't have this like big debt, right? Like Luna is kind of unique, or at least it was unique until very recently, in the sense of like Luna as a token, the layer one token was actually tied to the other layer one token, which is UST. In a way, like that kind of combination resulted in
alchemy.
Yeah.
Mankind hasn't fixed alchemy yet.
Yeah, you're not gonna have like Ethereum disappear because there's no like debt that Ethereum has to pay to somebody that could start kind of getting a bank run.
I was saying for the last 4 years that if you cannot understand where the yield comes from, then don't touch it. Because when somebody tells you, oh, it's a complicated algorithm, no, it's not complicated, and it's algorithm. So if you, for example, Celsius has proof of community, proof of reserve with Chainlink, right? You can prove that cryptographically prove that somebody paid this yield and X% of it went to the community, right? So unless somebody, if it comes from your treasury and you just keep printing this magical money, right? That's not going to end well. And we still have plenty of protocols right now. We still have plenty of projects who continue to print stuff or give tokens out of their treasury promising yield, but that's inflationary yield. There's a huge difference between, for example, what Binance does with BNB or Celsius does with our yield and everybody else, right? Because we actually earn it. Everybody else just prints magical money.
Alex, I mean, I know you've clarified this, but I want to just get it from you. Wasn't Celsius exposed to UST? Wasn't Celsius as a business exposed to UST in some shape or form?
So our community has UST. Our community has Luna. Our community took loans against those assets, right? Our community we deploy these assets on their behalf. So when you see us putting Luna or putting UST somewhere to earn yield, that is done on behalf of the community. That's not Celsius taking any of our capital, any of our assets, and directionally deciding I'm betting on Luna or I'm betting on UST. So I don't decide for our community how they want to deploy it. It's their choice, right? They decide, I want to put money into Cardano, or I want to put money into Ethereum, or I want to put money into Luna, right? It's their choice. Our job is just to provide as many assets as possible and then provide the yield that they can earn from those assets. But again, there's a huge difference between earning yield from real recurring business, from a business activity. Somebody pays you yield because they borrow the assets and they make more money from it, or they use it for hedging, or they use it for something else, and just printing coins, right? If you're minting and printing stuff.
I mean, respectfully, I have to disagree because it's just not really exactly, yes, Anchor had a yield, and yes, it wasn't sustainable, but that's not why any of this happened. It's not related to anything. I mean, it's only related tangentially in the sense that it became so big, like UST and Luna became so big because there was this attractive yield in the market. But in terms of like why this happened and the problem with unbacked algorithmic stablecoins and the real story, I don't think it's because they decided to do this like big marketing spend of maybe a couple $2 billion of yield. I think it's more the designs and the kind of unbacked algorithmic design, rather than a company deciding to do like this temporary yield Crypto.com can offer like these temporary 40% yield or like, up to a certain amount, whatever. Like these are marketing spends. So, those are not sustainable, but it doesn't mean that everything collapses because of a yield. I think it's not
It
a
does
story.
mean that if you don't have a business, that generates profit, it's unsustainable. That's exactly the point.
Yeah, but that's not
Crypto.com makes hundreds of millions of dollars in profit from charging all of us fees. They have a spread. Everybody who trades on Crypto.com pays a spread, and they just take a portion of that and give it in the form of yield to attract people because they have to compete with Celsius, right? But Luna doesn't have that. They don't have a revenue stream, right?
They do have a revenue stream, like in terms of
a tiny revenue stream compared to the amount they were paying every month in yield.
Yeah, it was. I mean, it's a combination.
I think it's important that we separate, because again, everybody can call themselves a stablecoin, but it's important that we separate. There's 3 buckets. The first bucket are fully backed fiat denominated assets, Circle, Paxos, right? TUSD, TrueUSD.
I love the way it doesn't say USDT. I love the way it doesn't say USDT.
I don't say USDT because USDT is an over-collateralized asset. It's not a one-to-one backed. Okay, and Paolo, the CTO of USDT of Tether, was yesterday with Scott, the Wolf of Wall Street, telling you, as of this moment, we had hundreds of millions of dollars in redemptions, and we're still over-collateralized. So there's a difference between fully collateralized and over-collateralized. The second segment is over-collateralized. Tether, DAI are over-collateralized. Now the question is, what are they over-collateralized with? DAI over-collateralized by 50% with crypto assets only. Tether over-collateralized with hard assets, right? Gold, commercial paper, treasuries, and cash, right? Now, we don't know how much they have of each one, and they provided attestations and all kind of other stuff. And you have to decide, do you trust their the fact that they're over-collateralized, or you don't trust them, right? These people, you can't have $80-something billion, say you're over-collateralized and lie. You're going to go to jail if you lie, right? I mean, it's not... I
don't think that they ever said they were collateralized. It was an algorithmic stablecoin. I think all people knew what they were getting themselves into. They all knew that they had bought a certain amount of Bitcoin. I think there are a lot of questions now about the future. I think the first question...
That's when it collapsed. When did Terra collapse? The minute the market cap of Luna was lower than the market cap of UST, everybody realized that it's first come, first serve, meaning whoever can get their money out is going to get their money out, and whoever can't is going to lose all their money. That's really what happened, right? So as the market cap of Terra started going down, the music stopped, and it was a run for your life. And every protocol like that calls itself a stablecoin is just lying to its community.
Okay. Now, James, I want to ask you a question. Do you think we've seen the collapse of an algorithmic stablecoin? We've seen the collapse of multiple algorithmic stablecoin. Do you think that this is the last or the end of algorithmic backed stablecoins? Do you think that the concept of an algorithmic backed stablecoin that is not backed by assets and either fully collateralized or over collateralized, at least in the beginning, could actually survive?
I believe there's a future in it if it is backed. One of the things that got me excited about Luna was when they said they were going to back it with Bitcoin. I was like, oh, that's because, algorithmic stablecoins will lose their peg one day or another. That's why it's extreme risk. But I believe it is possible. I know that Near and Cosmos, there's 2 new ones coming out, and one just offered a 30% APY. So they're doubling down on the anchor.
That's Justin Sun. That's not anyone. That's Justin Sun. That's
exactly. But that's just not like does the cryptoverse not learn from sustainability? So that's the whole thing is, risk reward. You got to balance these things. Same thing with the yield and return. So
I want to challenge you on something. I think the biggest mistake that Luna made, and I think Luna made a couple of mistakes. Now, in hindsight, when we take off our rose-colored glasses, we can all be more critical of the mistakes. I think one of the biggest mistakes that they made was trying to switch from a non-backed stablecoin, which was 100% algorithmically based, because that's one game. And then what they did was they moved to become a semi-backed stablecoin, which was very under-collateralized. So that's the first thing. I think they moved from one field to another field. And the problem is when they moved to the second field, they announced how much money they had to defend the peg, which was an invitation for attacks, because when they were unpegged, they were relying on arbitrageurs playing the arbitrage and bringing the coin back to peg. And you could argue now that maybe that the attack would have happened back then. But I think the minute that they went into being a arbitrage plus stable backed, then what you're inviting is you actually talking, you're saying to someone, hey, I've got 3 billion to defend. How much have you got? And then it becomes a game of who's got more money. And that's when they invited themselves for attack. I think, to me, that was the fundamental mistake. Jordi, I saw you nodding. What do you think?
You know, you have this like famous scene in Silicon Valley, the show where Russ Hanneman, who's like one of the VC characters, he basically says like, you don't want to have revenue. You want to always be pre-revenue, and then you can sell the dream. You're going to be like the next, Facebook. Once you have revenue, people are like looking at your numbers. How much do you have? They're trying to measure it. It's going down, and then it kind of creates like a different dynamic. So it is kind of very much like that in a way. Like they try to mature. We're getting bigger. We have more money. We can start buying billions of dollars of Bitcoin. They had this like vision, and they kind of got stuck in this like in between period where people are actually have a number, like you said. They're looking at, oh, you have 3 billion. Well, now Bitcoin price has gone from 40,000 to 32,000. So now you only have 2.2 billion. That makes you vulnerable. It kind of creates like a different dynamic than if you're not even saying like anything about backing, and it's just like a purely trust-based thing. So unfortunately, it's actually like, I don't know if you guys followed Olympus DAO with like the Ohm thing. At some point their yield went from like 80,000% APY and everybody was going crazy. And then they said, okay, well, this is not like sustainable. So let's kind of change the token and stop the rebasing, and we'll kind of create this GOM token and we'll reduce the yields. And as soon as they tried to go sustainable, that's when it died. And there's like a lot of parallels to that.
I agree. So a lot of people are commenting about the lunar pillar, and I know it's causing everybody some PTSD. The little lunar pillar that you can see there. You can see it there. By Monday, it will be gone.
That's the one they're talking about. I thought it's the actual one.
No, it's the pillar. It's the lunar pillar. We will remove it on Monday. I know it's causing a lot of you guys PTSD.
Okay. I want to make another point about the DPEG, because I think it's important for all of your viewers to understand, right? So when people get a heart attack when they see, okay, Tether went to 95 cents. Tether did not go to 95 cents. There's a difference between two willing people on an exchange making a trade, exchanging USDT for USDC at 95 cents, and your ability to take any USDT, go to Tether and get 100 cents on the dollar. Okay? There's two different things. So when you hear about DPEG or you read about DPEG, I see people trading away their Tether because they think that it DPEG. Okay, that exchange with that specific participant, it's true for them. That's not true for you. Okay,
that's willing buyer, willing seller, and the one is that you can actually, what most people don't know is that you can actually go to Tether and you can redeem one USDT in Tether for $1, and that's what you're talking about. That's the difference.
USDC or TUSD or all these things. So it's important for our community, because the same people who stole our money at Terra, they're going to try to steal your money. They're going to try to create a panic and steal your money with USDT and USDC. They're not finished. They're still hungry. They're like, oh, that was an easy $1 billion that we made. Let's attack the next one. And
where do you think
the same thing happened in 2008? They first attacked Bear Stearns. They were feeding on Bear Stearns. When they were done, they attacked Lehman. And when they were done, they went after AIG until the feds came in and said, wait. Okay, we're putting a stop to this thing. So that's what they're going to try to do. It's important your viewers understand.
Where do you guys think this attack came from? Now, initially there were, first of all, by a show of hands, there are four of us. Well, there are four of us on the stream. How many of you think it was a coordinated attack?
Well, I don't know what it means coordinated. I think it's a one party. It's somebody who understand, like you said, Ron, you hit it on the nail on the head, right? They knew exactly how much ammunition they needed because Doc One said to them, "Hey, this is how much I have, and I have it all in Bitcoin." And the other side of the coin here, the most important thing is that it was already a down market. So the fire was already on. They just poured a little bit more gasoline on the fire, and the whole thing collapsed. If we were in an up market, they couldn't have done any of this stuff.
True.
But they realized that, okay, it's a down market. The Fed is causing all of this uncertainty. There's already people worried about the peg. All we have to do is push down Bitcoin and push down Luna, and the whole thing is going to collapse.
Yeah, I think the interesting thing that Do Kwon can take away from this is he needs to learn how to play poker. You obviously never did.
You don't show your cards, right?
Don't show your hand.
Yeah.
Because I mean, look, I'm trying to get something onto the screen here, but I don't want to reveal who sent it to me because I appreciate the fact that I still have balls and I don't feel like my balls being cut off. So if you just give me a second, I'm just cutting out the person's name.
While you bring it up, Ron, you had a great show yesterday, and you kind of shared with the community the pain of losing a lot of money. I'm doing the same thing here. All of us lost money. Okay, for all of you guys watching, it's not about how much you lost. It's about the decision you make right now. Do you believe in this market recovering? Do you reallocate? Do you allocate more? Do you allocate less? Or you exit? Do you go back to TradFi? That's really the main decision you have to make.
Yeah. So, I mean, there are these messages going around groups. Don't know if they're real, not real, that there was an attack that should have been coordinated. I reported on rumors that it could have been Citadel. And then I think within 20 minutes of my show being finished, I got an email from Citadel saying, please call us rather urgently, which I did. And they obviously denied having any involvement. So I don't think it was them. But I must say, I think it was an attack. And I think crypto needs to wake up to the fact that the more money comes in here, the more sophisticated the money is. And the more sophisticated the money, the more sophisticated the attacks are going to be.
Very true.
In the down market, look, we go through a stress test every 6 months, the crypto community. The banking system goes through a stress test every 15 years, right? The last one was 2008. So in our stress test, all the excesses, all the leverage, everything gets taken out, and every institution, every one of us is getting tested. Are we keep walking, or are we going to be taken out in an ambulance, right? So and there's going to be when we were a small market, the big guys, the big fish, didn't care that it was too little money for them to make 50 million or 20 million. Now they can make $1 billion in 3 days, right? Yeah. So it's big enough for the biggest sharks to be swarming in our waters, right?
I mean, I'm curious to see like what comes out in the end once all the, they do the biopsy on the body, and we'll see. I think there's a chance it was not coordinated, because the reality is that there is this like cascading loop of like, risk tolerance. Like I was an anchor. I saw what was happening, 99.8. I mean, I'm out. Next guy sees 99.75 now, then he's out. Next guy see and then you just have this like cascade, and then it just becomes, so there is a way to imagine it where it can happen without just like purely based on like a cascading panic without somebody coordinating. So I'm not sure how coordinated. Maybe at some point, yeah, like people smelt like there's, this thing is dying, let's just like add fuel to the fire. But in terms of like creating the initial thing might not have, it's unclear.
What's the damage that this has done to the crypto industry? I mean, you probably wiped off $100 billion of market cap, because you wiped off, say, 35 to 40 for the protocol, 18 to 20 for the stablecoin, and then you had Astroport Dex, and you had Kujira, and you had White Whale, and you have a whole big ecosystem around it. I mean, that's a massive hit. And I know you can't really compare this because Enron was much earlier and money was worth more, but Enron was a $60 billion collapse. This is a bigger than $60 billion collapse. This is a big collapse by global standards, world standards for every market. What's
the worst part is that now the lawmakers and the regulators are going to use this as a fuel to basically put shackles on all of us, right? That's even, it's not just the money lost, right? Because now everybody who was in Congress saying, hey, we should regulate stable coins, we should stop these guys in crypto from hurting the banks, right? All of them now have triple the ammunition, right? Because we've proven their case, right? So it's very painful. And unfortunately, to answer your question, many people are going to go back to TradFi, right? All the tourists in crypto that came here thinking they're going to get rich overnight, a lot of them are going to leave. And we're going to find out who's here for real to build the future of finance and who's just a tourist who is coming thinking, okay, this is an easy ride. I'm going to be a millionaire in a few days.
Okay, James, what do you think? I mean, the damage that this has done to the ecosystem, we took $80 billion of crypto money, call it, and we destroyed it. And those were, you know, I always say in a business, you know, when you look at a business, you say, the first thing you got to do is you got to worry about your customers, because it's much easier to keep your customers than it is to attract new customers, right? We took our customers, we blew up $80 billion worth of our customers, and now we have $80 billion worth of net people that are being injured in this ecosystem, and now we need to bring more money into the industry.
Yep, I think it's a great thing, and I've been thinking a lot about for more than 30 years. I've been thinking about psychology and investing and the importance of that. And you would think if people were logic-brained, they would move to pristine assets right away. They would get rid of 98% of tokens and move into Bitcoin, Ethereum, maybe the ETH killer if there is one, etc. That's what would happen. But I think the mentality of the people now is, okay, I just got hammered. I got kicked in the teeth. I've lost 60%, 80% of my wealth. The only way I can get it back is to degen back in again. So if you looked at Bitcoin dominance yesterday, it spiked above 45. And now
first time in a while,
closer to 44. So I think there was a moment where people moved to the safer bets, but they're going to degen. It's just human nature. So I think, yes. Number two, I think people will not change.
people are going to come back to the casino. Is that what you're saying? You're basically saying the degens are coming back to the casino.
Absolutely, because they want to make so humans do not like admitting that they are wrong. That, you know, if they get beaten, they're going to come back to win again. And the quickest way to recoup their losses is to go high risk. And this is a classic mistake. That's why people are still buying GameStop and AMC and stuff like that. It is a classic mistake, and I don't understand the wiring in the brain, but 30% or 40% of people are like that.
But just to add to what James just said, the same thing, if you zoom out, the same thing is happening with the financial markets. The reason the dollar is at the 20-year high is because everybody's liquidating gold. Gold is down like how many percentage points, right, from its high? Everything is down because people are liquidating and moving into cash. So the hoard of cash is still huge, right? And a lot of that cash is going to come back to the markets. That's what's going to cure all of the pain and all of the problems that we're talking about. We just need to see a few more prints of lower inflation. So the same thing that's true in the our little microcosm of crypto is true for the global economy as well. We're trillions.
It happened here. Look, when UST first went down, it went down and it came back up again because everyone thought that they had to prove to themselves. Like James said, they didn't want to admit they were wrong. Went down again, came back up, gave a second chance for people to get, a third chance for people to get out. And then a fourth chance, and that was pretty much where the whole thing fell into a heap. All right, I'm gonna now put you guys a little bit on the spot in a very uncomfortable position. The reason why I'm putting you guys in a very uncomfortable position is because I know that it's very hard to go onto a stream, anybody's stream, and tell people what to do in a time like this. Because, you know, when things are going well, people love the advice that you gave them, but when things are going bad, they need someone to blame, and you know, you're always the person to blame. But if you were sitting here and you've lost a lot of your wealth in Luna, in this massive market collapse, what's the advice that you would give to community members who are watching and want to make their money back? So this is the thing. They want to make their money back. What advice would you give them? What would you be DCAing into if it's a DCA thing? Don't try and give me a vague answer like just DCA into Bitcoin, because you know that's not what the people are going to do, right? You know that's not what they're going to do. So yeah. So let's be a bit more
And
practical.
put a disclaimer that it's not financial advice, right?
Of course, and let's put it.
A disclaimer. So I have an answer that actually I think qualifies without a disclaimer. Okay, and I slept like a baby last night. I slept the full night, because I have conviction, right? So again, if you cannot sleep at night, if you bought anything and you cannot sleep at night, you have too much of that asset. If you're sleeping like a baby, that means you don't have enough of that asset. And each one of us has a different barometer or thermometer, where we Celsius, so it's got to be a thermometer, measuring the level of risk and the level of exposure that you want. This is getting to financial freedom is not about ending up as the richest person on the planet. It's about you having enough money that makes enough income so you can live on it until you're old and you're decrepit, and you don't have to rely on your kids or help or anything like that. That's really the magic of financial freedom.
Oh, you're gonna put me on the spot first? Oh, thank you. Okay, all right. Look, you said no. For me personally, what I'm doing is, of course, I just like Bitcoin, Ethereum at these prices. If I can get Bitcoin below 30K, if I can get Ethereum below 2K, I know if I just wait, I'll do well. I have no doubt. So, otherwise there is going to be a little bit of a period where like the market needs liquidity. You guys have been talking about everything, and they're right. Like there's not that much liquidity right now. We need dollars in the system, and then everything reinflates again. So it's going to be a while. It's going to be probably a few months. I don't know that there's like an immediate thing. In terms of like, if you really like shit coins and you want some narratives, I think, I'll throw a few out. But again, like we need like liquidity first. So half disclaimer. Look, Cardano is probably going to have a little bit of a moment with in June. They have like a new smart contract functionality improvement that should allow like more apps to be able to perform. So we might have a little bit of a Cardano season. I think Cosmos is being smashed so much, being kind of linked to Luna. It's so low, kind of below 10 cents. If you can get Atom, it's a good price. It still has some tokenomic issues. They need to figure out how does it accrue value, but it's an attractive price. And if you really like to kind of degen, there's the Steppen, so GMT. It's also come off quite a lot. It's at $1 ish. That's not the worst.
It's not the way. I must say it was trading at $3 and $4 when it listed on Coinbase. But that's still, I think, a $5 billion fully diluted val. I think, if I'm not mistaken.
Yeah, but I think the concept is quite interesting. Like this, like move to earn, step to earn. You got your like iPhone app, you're checking and like how many steps, and you're actually getting paid. I think that concept, it has some room to go. Like we saw Peloton, even though it's kind of died now, it had this like temporary like rush up. So I would say if you're degen, you want to degen up, something like Steppen, it can have like another big push. But it's risky, right? But
yeah.
There you go.
James.
Yeah. So it's funny. We all got kicked in the teeth for the first time in a couple of years. I got some short-term capital losses that I can take. So I'm going to go full degen, but the way I do it, and that is swinging, and not the swinging that some people may think, but swing trading between assets at different points in time. So right now, it's so funny. Raul Paul just tweeted, crypto is in full panic mode. All the monkeys are flinging poo at each other, et cetera, et cetera. But there's never been a greater risk reward. So I am absolutely mechanical in how I invest. I do it based on data, based on history, based on layers, based on patterns between different assets. And now, like we saw, like I took out all emotion. I had limit orders in for Bitcoin, and I couldn't even believe they fell. I got up to pee the other night. It was like just after midnight, and I said, I'm not going to look at my phone. If I look at my phone, I won't be able to get off the phone. and like the timing of that was quite incredible, because Bitcoin went right down like below 26K. I was like, holy crap, this is incredible. But you could watch. I had to go downstairs and look at the chart, and you could watch the buyers come in. All the people with the limit orders, and you can watch the wallet holders greater than 10K. They've gone up. I think there were 10K wallets was 82, 60 days ago. Now there's 93 of them. So, everybody watch what the whales do, but think about that swing pattern. A classic one I did lose, I can't say I lost money on Bitcoin ever because that's something you buy and hold. But MicroStrategy, I lost money on because it wasn't in lockstep with Bitcoin. It's a classic swing trade. You can see MicroStrategy's up 25% today. Bitcoin's up whatever percentage. It is far more volatile, and that's everybody where you can make money, not financial advice. And one final thing as well, I woke up in another cold sweat the other day thinking, okay, there's only 14 million Bitcoin. There's 8 billion people on the planet. 65% of the Bitcoin is with hodlers. That means there's only about 4.9 million Bitcoin left. That's 0.00062 per person. So I realized I don't have enough Bitcoin. Nobody has enough Bitcoin. So everybody just think about that. Yes, it's safe. Get some Bitcoin and then use a small area of your portfolio to swing to ladder back in. But be careful with the risk out there. As I always say, 98% will go to zero in the next 4 years. 98% of tokens.
My biggest issue with this is I don't know how I'm going to convince my wife to swing. I mean, I get everything you're saying. I just don't know how I'm going to convince my wife about allowing me to swing. I don't know. Okay. What else was there? Elon and Twitter. I wanted to get your take on Elon and Twitter. He's temporarily put the Twitter deal on hold. And what the speculation is, or what he's asked for, is he wants real data about the fake accounts, which Twitter is claiming is less than 5% of all the accounts on Twitter. What do you think?
It's less than 50%. So it's, look, I think he's renegotiating. He realized that the markets have corrected and he could have paid half the price. And he's a billionaire, right? He's the richest guy in the world. So he can go to say, he knows no one else will pay this price. He's like, okay, you guys give me a discount. You think
he's negotiating for a discount, really?
Yeah, why not?
Absolutely. Yeah. This was, in fact, I spoke about this with somebody about a week ago. First of all, he always plays steps about 3 or 5 moves ahead of everybody else. Second of all, the whole thing is kind of a game, and I do believe he has played the game. He boxed him into a corner to win the deal, came out with all this other stuff, and I believe he is trying to compress the price to get a lower price. He now knows he has it. Now he can haggle over the actual price. So I think he's a very smart guy. I think he will eventually get it. Just a question of how much.
Jordi, what do you think?
Yeah, I think the guys are right. I think he might get a little bit of a discount here. But he probably really wants Twitter. He wants to have it just for fun. He wants to be able to dictate a lot of the conversation. So I think it'll go through in the end.
Yeah, I wanted to find, there's a tweet here. I've got to just quickly find it. It's a tweet by Will Clemente. And part of the tweet was very funny for me, but part of it was actually quite real. Let me actually quickly find it. We've got a couple more minutes. So I always find it hard to take advice from someone so young, and especially when the advice is, for the past few months, I've been saying it's a great time to DCA. Now I believe that Bitcoin is very close to multi-generational, galactical pico bottom, where I plan to allocate all of my dry powder for my grandchildren's grandchildren. I mean, it's strange. It's strange to me when I think he's 18. So it's very strange for me when an 18-year-old writes like this. But he does say a few things here. So let's quickly go through the points. He says we're very close to realized price, which is 24K. How relevant is that?
Very.
It is relevant.
That's when the big money is looking to add to their portfolios, make that, big hedge funds and sovereign funds are looking for a 2% allocation. This is what they've been waiting for. And that's why you can see every time we had that dip, we had that nasty wick to 25.3 or whatever it was. Whew, they're in. And they buy, and that's why you see the increase in wallets over 10K. So that MVRV score is, for me, not the RP score, the real price is the bottom. So a lot of people are still calling for the 10Ks, the 12Ks, the 15Ks, the 20Ks. Just with the buying pressure, there's so much smarts out there now that understand how Bitcoin works. They know this is a dream price. Right. If it wasn't for, and one other caveat, if it wasn't for the Luna implosion, I don't think we would have gotten under 30K, maybe 29K. That was it.
Yeah,
no chance. There's no chance we would have got there. All right, MVRV score almost in the green. So almost in the little green box. How relevant is that?
It's a historical great time to buy when it's this low. It's just
dormancy flow has set in the buy zone for the last few months, but is now approaching levels previously set generational bottom. So that's adjusted entity dormancy flow.
Well, it's a very